Hello everyone, welcome to my channel. My name is Benjamin, and for those of you who know me, I'm the Buffett investor. Right, so in today's video, we're actually going to talk about something very interesting. It's about how actually Warren Buffett, how he has actually changed his investing, approach and philosophies. And then after that, I'm also going to touch a bit about this powerful thing called the book value, which is also found and taught by Benjamin Graham, and also looked at and spoken by Warren Buffett as well a couple of times. And I thought I'd like to share this wonderful powerful indicator with you guys. So for you, some of you know Warren Buffett. He actually does a lot of value investing, but you know that his teacher is actually none other than Mr. Benjamin Graham, right? And the thing about Benjamin Graham is that he always, back then, one of his theories was really looking about cheap companies. So really, if you were to put it in a way, it's like you're looking for like those quoted by like Warren Buffett's like cigarette butts, and then you take a few more puffs and you have to throw the cigarette butt away, right? And the thing was that however, just looking at cheap companies, and that's something that I'm very careful. Sometimes we fall into the value trap of just looking for cheap companies. Is that back then, even in the 1929, during the Depression, when the market crashed, and unfortunately, Benjamin Graham also suffered a lot of loss in his the wealth, right? And also, that taught Warren Buffett, as he was learning his the investing approach. Back then, he also followed Benjamin Graham's teaching as well. So I think Warren Buffett bought in a lot of this kind of like cheap stocks initially. But around the 1970s, he started to realize, or even around the 60s to 70s, he realized that the market was actually becoming very heated up as well. And a lot of companies, their P/E ratios was crazy. It was also going to like the 60s or 70s, and it doesn't really reflect the true value. And actually Warren Buffett, this is something I really admire about him, is that he took a stand. At that point in time, around 1969, when people, they were still hanging on to their stocks and they were buying, Warren Buffett actually cashed out. He sold off some of the equity stocks, and he cashed out, and he was sitting on it for 3 years. In fact, he was saying that he was just doing nothing, and it was so painful, but yet, he was so patient, and he believed in that, trying to be a contrarian investor. You are doing the opposite of what people are doing. And fortunately, what happened was in the 1973 and 74, when the market crashed, wow, can you imagine that? People were actually losing up to almost close to 40 or 50% of their net worth. Example like Charlie Munger, imagine him. This is actually the trusted sidekick of Warren Buffett. And apparently back then in the 1973, around that same timing, Charlie Munger, he was actually managing a fund, or his hedge fund on his own. And apparently he lost almost 40% of the value of the stocks. On the other hand, Warren Buffett was holding on to cash. And back then, once the market crashed around 73, Warren Buffett went in big time and actually bought, a whole lot of stocks like, like the Washington Post, things like that, CocaCola, and he has made his returns. I think, example, using the Washington Post, he bought about almost $11 million worth of stocks back then. And wow, and then by now it's almost worth close to almost 500 million. And can you imagine that? So that's almost like close to 5,500% increase in terms of the value. And that almost works out to about annualized returns of almost about close to 38%. Can you imagine that? Wow, it's really impressive. And that got me really thinking, is that how Warren Buffett, his investing philosophy has slowly kind of changed and adapted along the way. And this brings me to the next point, is that really, how do we actually look at very strong competitive advantage companies, durable, competitive advantage? And that is really one of the key success factors by Warren Buffett. In fact, he quoted it, he shared, is that, ideally I would like to look at stocks that I'm able to predict their earnings in the next 10 to 15 years, right? And how do we actually look at that? Is, in fact, this indicator is called the book value. And how do you calculate book value? Book value essentially is that we're actually going to look at the balance sheet, right? And then we're going to see, can you take away the asset minus away your liabilities, and that's what you will end up with. That's the equity value, which is also equate to the book value. So essentially what we want to do is try to identify companies that has strong growth of the book value, is going up year on year, right? It might give you some indication of how the intrinsic value is going. But having said that, please be careful also, is that it doesn't mean that the book value is equal to the intrinsic value, because to be honest, book value is just given at one point in time. That's what the equity value is. Whereas for the intrinsic value, is actually taking into consideration of the future value of the income or future streams of income. You actually try to factor it into to assess the intrinsic value, right? So normally the book value and intrinsic value, they may be up or down, but generally speaking, if you show a positive trend, growth trend of the book value, it will actually give you an indication of whether or not year on year is the company's intrinsic value actually increasing, right? And so actually Warren Buffett talks about actually looking at this, in fact he quoted by his own company, he said that in I think one of his the shareholders letter is that we want to actually share with you, the book value of Berkshire Hathaway, because it actually gives us an indication, right, that of how the company actually is growing and doing in terms of its intrinsic value. Wow! So imagine Warren Buffett actually also shared that, to his shareholders, right? And I think this is something that we can actually take back and also look, especially when you're looking out for companies with a strong, durable, competitive advantage. One way is also to take a look at whether the company has very positive, strong growth in terms of their book values, right? So I hope in today's video you have taken away how Warren Buffett is a man that is able to change adapt his investing strategies and also to be a very contrarian investor, right? Always doing the opposite of what people are doing. And also fundamentally to understand how looking at the book value can help you to identify a strong company with a competitive, durable advantage, right? And I hope you have learned something from this video, and stay tuned for the upcoming video. I'll see you soon. Take care.